Hello traders, good week. Vladimir here, and this is the weekly forecast for 8th of August 2016. Well, the non-farm payrolls is behind us and the numbers keep surprising to the good. A lot of rumors were there that we might see some drop on the new job created, but in reality the numbers are huge, and USA market keep producing the new jobs on a very good pace. Now in reality many of them are still very low paying, but the bottom line, Mr. Market reacted to the last non-farm payrolls by the fact that they expect now the Federal Reserve to go and to increase the rates at least once again, as they said on the past that they will do if they reach certain numbers. They reach them and the pressure on the Fed will be very serious for the next meeting or the next meetings on 2016. So what is going to happen actually from here? The idea is that with the expectations of the dollar, or of the Fed to increase the rates, that means the dollar is expected to gain strength. But let's remind how such things normally happen. That was the first reaction after Friday, right, with the release of the data. But the question would be how the market will actually react, because the speculations and the rumors from now until the Federal Reserve meeting would be back and forth. Will increase, will not increase, will increase, will not increase. The game of guessing. Every new analyst will throw a new view, a new idea, and that will certainly affect on the price movement. That's what makes the movement, right? So let's put the lines, let's put the numbers, and let's start get ready for the coming week. Euro dollar, after reaching the trend line and completing the 4-hour chart movement, the same special cycle we've been talking about in the last week, we can see here we got the divergence and we got the drop down. So the biggest question will remain right now, what's happening from here? Okay, now watching on a weekly chart, let's start from the weekly. We still play and move inside this. There is a chance we will continue to move inside this for a while before anything decided. That could happen. Okay, and therefore there is a pretty serious chance we are aiming for the bottom right now, which could be easily zone of 107, 105 once again. Now if we take a look on the daily chart, we had triple cycle to the upside, right? This was the second and this was the third. Triple cycle, which was also kind of a channel here. We might go and get the triple cycle to the downside. Now we've been talking about longing from here, we got the move up, and now we are back to bearish hidden divergence here, which could easily start the continuation move down. So in other words, with the expectations from the Fed to increase the rates, the speculations, not just the expectations, and the trend line to hold, as long as we are below this high of 112.30, every rally should provide us a sell opportunity. The rallies ideally to be in two waves or down, or one fast wave and we are going to sell. Now drop to lower time frames, of course, let's say like 1 hour chart, maybe even 30 minutes or 15 minutes if you are intraday trader. And every time you will get something like that, look for false breaks or trend line breakouts to short, because that's what would allow you to minimum your risk, to drop your risk to minimum. Makes sense, right? And this is our idea here. We could, by dropping risk to minimum and increasing the profit, potential profit, to maximum, we earn several things here. But the main thing we earn is the possibility that we could go wrong 1, 2, 3, 4, 5 times, and then boom, catching one move to pay much more. This is the entire idea here, not how many times you will be right. No one cares, no one judges you by how many times you will be right. Right? Our goal as traders is what? To be right? No, that's the job of analysts. They have to be right. Our job as traders has to be make money. So that's the main thing we should be looking to do, to get the good levels and to look to increase the risk reward in our favor so we can make much more profits. Even if we're wrong at the beginning 1, 2, 3, 4 times, that's fine. Okay, so that's about the euro dollar and its opportunity that is facing. Now, could there be a chance that the euro dollar would make the turn from here, break and continue higher to complete this double wave? The answer is yes, but that could happen and would happen only and only if the Fed will say no hikes on 2016. That could be a huge disappointment to the investors, and then they could drop the dollar fast. So we have a plan for a sell. We have to remember it's now a time of speculation and rumors, and the Fed is not stupid as many try to show them, and they will know what to do best, and they know what to do best for their own economy. And I'm not quite sure they will rush to increase rates right before the election. So we will have to be very, very careful and see. As much as it is wanted to go and sell the majors and buy the dollar, actually buy the dollar versus all, as much as it is wanted, we have to remember that there is a chance that the Fed will not make a move, and that could be a very disappointing thing. Pound dollar, well, is that the beginning of the down move? 136 we were talking about still was not closed, and the break above this wedge we talked about 2 weeks ago provided a rally which stopped by the cash rate cut and increasing of the purchasing in Britain last Thursday. So they did cut the rate by 25 basis points, and they did increase the purchasing every single month. So Mr. Carney, actually, what he tries to say on this situation is, I did my thing. Now it's your turn, Mr. Government. Actually, it's Mrs. right now, right? So he actually moves the ball back to Theresa May, and he said the central bank did what he was expected with all the Brexit to come. Now it's your turn to make sure your negotiation plan with the European banks would be good as well. So the pound dropping, and technically there is a room for 125, there is a room maybe even to 120 until the weekly divergence recreates itself. The biggest question that will remain currently open is, again, are we going straight down from here, which could easily happen if the speculations of the Fed to increase the rates will hold. Then we can look to sell every rally back to this trend line, connecting the last stops. Or are we currently after a second leg up, which could take us back to the 136 we talked about, or maybe even lower before the continuation down? Which of the scenarios to happen? Actually, right now, the only thing that makes sense is to sell pound, right? Because they did cut the rate, while the Fed is expected to increase the rate. So I would very easily here go only with shorts. This is the trend line here, and this is the trend line on the short terms, right? Every time we can get closer on lower time frames, get the trend line and the break below trend line, and we can sell. Same idea, look to minimize the risk and to maximize the profits. And this way, even we are wrong 1 or 2 or more times, no one cares, as long as at the end of the day and at the end of the move that could come, you make money. That's what counts. That's the only thing that counts. And that's very unfortunate, where so many traders fail psychologically. Everyone, for some reason, thinks that they always have to be right. And if they are wrong, for some reason, it makes them worse. So, my friend, let me be very clear here. No one cares about how many times you are right or wrong. Everyone cares the bottom line. If you know to make money, or at least not to lose money, or not. Right? No one cares if you'll be right 90% times of your prediction, but on the 10 times you are wrong, you will lose more than you profit. No one cares about that. Right? That's for analysts. That's for analysts. That's their job. And there is a very good saying that the analyst will talk tomorrow about what a trader traded yesterday. Right? That's basically the difference between trader and analyst. Anyway, back to charts. Let's take a look on the euro pound, which is the crossing between the pairs we have been talking about. The pair has all the reasons now to continue higher again with the cash rate cut. I do expect it to reach the 0.87, 0.88, maybe even higher a bit. The question is what's coming from here, and that's a bit tricky because there are two things that could happen. Because we did have a vertical move up. So after a vertical move up, sometimes the moves are not too obvious. So there is a chance we will still get something like that. And then a rally. That could happen. And for that we need to see how the 4-hour chart and the 1-hour chart, how actually the week starts. Because if it holds the 4-hour chart 20 EMA and the broken, it was a resistance here, right? Now it turned to be a support. If it holds it, very good. We also can draw the line, and this is a trend line, right? If it holds that, it has all the chances to rally towards 0.88. But if it doesn't and break down, there is a pretty serious chance we are after a second leg down, maybe this time to close the gap around 0.8130. So keep an eye, as long as I said, as the trend line holds and the 4-hour chart support, broken resistance support hold, we can actually look to buy. If it is broken, we are going down to the second leg down to complete it, and then we will switch to buys. Let's move on to dollar Canadian, which was a beast on Friday, holding the trend line again, completed the 4-hour chart cycles with a bullish divergence and broke above this trend line, creating a bullish convergence and basically trying to hint us, guys, there is a chance we are after second leg right now, for the bad triangle here, okay? There is a big chance we are now after a second move up to 135, 136 area, maybe even a bit higher, until this divergence will recreate itself. So, as we completed the convergence here, look for buys, bottom line, okay? So if we get any two waves down, go and look for buys. Same story like with the euro and with the pound. Look to minimize the risk and to maximize the potential profit, which we know the level, that's right, 135, 136, maybe even a bit higher. That's where we will want to aim. So we will have to make sure on lower time frames, such as 1 hour or 15 minutes ago, if you are intraday, we will want to get minimum risk. That's our goal here, to get the best risk reward we can. So look for buys as long as the daily trend line that was holding, not once, not twice, not thrice, even more, holding. Every time I get closer, look to buy. Should be very good opportunity. Next one on the list, I want to talk about New Zealandian dollar, because this pair so far moving exactly as we wanted in this channel, and it's expected to continue. But here comes the but. on this Wednesday, New Zealand will announce their rate. Expectations show cut from 225 to 2. Will they? Or will they not? That's the answer, where we'll get the answer on Wednesday. We have to pay close attention, because if they will, which the market tries to represent, there is a pretty serious chance we are moving now, after the triple cycle up, 1, 2, 3, we will start to move something like that, back to 080, 068, 067 area. Once again, the expectations from the New Zealandian to cut the rates and the Fed not to cut the rates makes us understand that we are after sells. How? We back to the trend line and this resistance. If we can get closer to that, look to sell. Bottom of the daily range right here would be the first target. 067, 068 zone would be the final destination. Very nice opportunity. And Aussie dollar, which completed 2 false breaks in a row, and they also did cut the rate on the last week, here and here. 2 false breaks, bearish divergence. That's a pretty serious call for sellers. Trendline was broken. As long as this top holds, there is pretty serious chance we are after move down. Question is, how deep could that be? Okay, and the answer is on the daily chart. This is the divergence. That's the false breaks we had on the daily, and it means we can play inside this kind of range. So on the first step, I would expect to mirror this double cycle, so something like that. After that, very likely continuation all the way lower. There will be a report from China this week that could be effective on the Aussie as well. We have to pay attention to that. That should be on Thursday. Okay, eyes on this pair, which could really provide nice sell opportunity with really a great risk reward. And all that as long as the last top holds, because if it is broken, there is a chance we are going for one more high before the down move, but we'll have to see. Anyway, it doesn't matter how we turn it around, my view remains the same. I think we should get this and this. So my view actually remains the same. Short-term sells, long-term buy dips and buy heavy dips. Next on the list, dollar yen. Actually, let's talk about the dollar yen. But before, you know what? Before, guys, we talked to the New Zealandian, we talked the Aussie. Let's talk the cross, and the cross shows buy. You remember how many times I was talking about this buy, and you know how bullish my view is. Buy the dips. By ideal, right now we will need to get something like this. Is a trend line, and we got the false breaks, 1, 2. By ideal, we should get this, maybe back to the trend line, and continuation. Every waves down, and maybe even with bullish hidden divergence to form, look to buy dips. But also remember, there will be news from New Zealand about the rates. We have to give it the full respect. If they will not cut, it might affect differently. Then we will have to stop and reconsider. But currently, stay tuned for every buy opportunity, especially if they will actually go and cut the rate. Okay, that's very important to follow. Very interesting opportunity that could pay very nicely. According to weekly, we are after 113 again. So the risk reward, you calculate it. It's a monster risk reward, so very good. Next one, dollar yen. What is with this pair? Are we going to 98 or 97, or are we after rallies from here? It's holding the support, but to be honest, I wouldn't deal with this pair. Watching on the weekly chart and daily chart combo, something is yet just that just does not feel too right. So I wouldn't rush here. And my view is currently stay away and wait for better opportunities, which we might figure out during the week. Okay, so I will update you on during the daily videos I create. But currently, in the beginning of the week, that's not clear, just not clear. What about the yen crosses? Euro yen, same story. Yeah, it's holding the trend line, but weekly still looks like potentially all the way down. Yeah, we could go for 2 waves up first before one more push down, but does it really worth to deal with this one? I don't know. Currently, I am not convinced at all. Maybe on the short term, the false breaks we had here, right? 1, 2. Maybe by breaking this top and retrace, we might try short term long, but on long term, I don't know. Something just doesn't feel right. Same with pound yen. Okay, with all the rate cuts and everything, there is pretty serious chance we are after one more low, 125-ish. So we have to be very careful here. Okay, but the one to pay attention to, which I start to like, that's Aussie yen, which I want because of the weekly cycle this one had and still has. This was a special cycle here. 2 false breaks, 1, 2, divergence. Really great situation. Daily, double cycle and double cycle. So by ideal, and I repeat, by ideal, we should face one more push down to zone of 76, 75, recreate some bullish divergence here, something like that, and boom, buys. Should be really good opportunity. Keep an eye. Really nice opportunity might be coming. Okay, next one on the list is going to be Aussie versus the CAD, which I want you to start get prepared because the daily and the weekly chart suggest that we might have a duplication. Okay, there is no divergence currently, so we might get all the way to 103. Therefore, longs the retraces. We do form some kind of divergence here right now, so on the short term it makes sense we will see kind of retrace. Okay, you got every pullback to happen, look, to complete the buys towards 103. If it just keeps rallying, then let it go. Don't try to jump here because the risk reward currently doesn't worth the risk. Let it go, and around 103 start to get ready for a massive sell. On crosses like pound Kiwi, pound Aussie, I don't really like currently. Let's talk about gold and silver, which actually were very nice and did so far exactly what we expected. Let's start with the silver, which looks very good by holding this resistance. Now the question is what's coming next. Are we for one more low? The answer is probably yes, but I actually think we are going for this cycle. And the reason is this trendline end cycle. The reason is actually if we put the lines, we can see that the 161.8 is going to meet us exactly on the trend line. See that? So that's why I believe we are going lower here, and from my point of view it is yet sell rallies. We have a trend line. Every time I get closer we should reconsider sell opportunity. Is there a chance we will be moving first of all in kind of a range? The answer is yeah, but even with that we still have plenty of room to go lower. So every time I get closer to the trend line, look for sell opportunities, aim at the bottom of the range, and then to the big trend line on a daily and the 161 expansion of this cycle here. Okay, looks good. Gold should follow the same idea. You choose what to trade. This is a trend line that has to be broken in order to gain the momentum. Break, retrace, and we can talk about sells. We have this trend line building. Every time we can get closer, look for possible sells. Minimum risk, maximum reward. That's the idea, even if we get wrong. That's what would save us. Oil and indices. Oil, well, tricky, but I suspect oil to create one more low towards was 38, 37, maybe even a bit lower. So what probably would happen here, probably, is that's scenario number one. 1, 2, 3, pull back and one more push, and then a sell. Okay, and the second scenario that we are just now going for a deeper retrace, this area, and a sell after that. So if we take a look on the levels, there is a chance we are going to here. That's 44, the same 44 we were talking about. That's 161 expansion, and if we go closer, I believe we are after one more bottom. So as I said, two scenarios: 1, 2, 3, 4 correction, and one more to 44 zone, or one big expanded and then a drop down. And indices which are rallying big time after the last news. As I said, we are still playing on the very massive zone. They are too excited with the last job market report, but divergences here on all the cycles. So from my point of view, it's only question of time. I wouldn't rush nothing here because this convergence failed to hold, so I wouldn't rush. I would wait for another one to go for a sell, unless this is an investment, and then it's different approach, different story. And same with all the others. And here is one good I love to watch: DAX. I was looking during the week to short, which I got kicked on the break even on my attempt, but DAX still able to hold this top, as it's a 61.8 expansion of the cycle. It also might complete this special cycle here and make a duplication, and then boom, double wave and a sell. So we have to see how it begins, but every rally, even for new highs, as a sell opportunity. So that would be all for this week. Thank you very much for watching. I hope it was helpful for you. Don't forget to click the like button if you liked. Leave your comments and your feedbacks. That's always very great motivational thing for me, of course, to keep working hard for you guys and create the material and the things for you. Feel free to share with everyone who you believe can have any kind of benefit by watching that. And that's all. I wish you a wonderful week, happy trading, and I'm here for you for any question if you have any. Thanks for your time watching this video. Yours, Vladimir Ribakov.